Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. We've gone ahead and rolled our analysis over to the July contracts. And as we can see here with the July corn contract, the action that we're seeing is very consistent with what we had been expecting. Last week, we shared about how the market had come up into volatility-based resistance. And what we could expect from there was for the market to actually reverse or at least go sideways for about 6 to 7 trading days. It's exactly what we've noticed. But in addition to that, the market has done a very fine job of tracing down along our one-by-one angle. After tracing down that one-by-one angle, the market has since really come in very close to our time factor at the end of this gray zone here, and the market really gave us a very nice big explosive move today to the upside. Upon this move that we're looking at right now, we're looking at current resistance overhead with our 1x2 green angle. And at this resistance point right now that we're looking at, if the market's able to continue with strength overhead, we would anticipate that we can see a move now that can perhaps test somewhere in the neighborhood of 390 and possibly eventually up to about 400. We don't want to get ahead of ourselves, but what we're seeing right now has been really collecting over the course of time as the market has been making for itself a series of higher lows, which suggests that we have buyers coming in and continually lifting their orders or lifting their bids, helping to support the market a bit. Now, we have a very key date coming in next week on Monday, Tuesday for a potential timeline. So if the market moves up into this time, we want to be cautious here for another potential correction to come in. But as long as this market is able to continue to make higher lows, then we can look ahead to potentially higher prices going into the summer months. July beans came in and touched volatility-based resistance coming in at the end band, or the very end of the bands of this volatility zone. Upon doing so, we were looking for about, again, 5 to 7 days of downward to sideways price action. The market gave us a little bit more than that, and in fact, on Monday, we had a pretty big down day. Part of that big down day that we saw on Monday was supposedly the result of good weather or beneficial weather that occurred in Argentina, at which point we saw a pretty big down day on Monday after that news. The following days, we saw a very small, tight inside day, followed by a pretty big move today that recaptured much of those losses. So apparently that news over the weekend was not as good as anticipated, or really had very little to do with the actual price action itself. As we look at the market right now, we do understand that over in the Asian markets, that they're celebrating their new year. And given the New Year celebration over in the Asian markets, we've had a reduction of participation, so it's made it a little bit easier to perhaps manipulate the markets a bit. With the market then coming down, perhaps what we saw is a shaking of weak hands, pushing prices slightly lower into support. Upon hitting support near this 1030 level, the market came in, found a good level of support, and has since bounced up from there. And so perhaps now, as you look at the headlines of what the trade is suggesting, is that the buyers have returned to the market. And in fact, in a similar fashion, what you're noticing is a stepped up effort with the bids continuing to climb higher. So if this current move that we're seeing right now is able to garner some legs, we would not be surprised to see an advance that perhaps goes up in the neighborhood of 1110 for this contract in the not too distant future. The support that we found today did come in right up against our natural support level here. And we also are seeing that the market came in right up against our angle and a time factor that's coming in over the next couple days. Right now, we're looking for overhead resistance, perhaps at our 1x1 angle up. And if the market gets through there, then you're talking potential strength incrementally as it makes its way up through each of these levels. Again, it's not guaranteed that the market will continue to have strength, but that's what we're seeing right now. Overhead resistance, then we see Over at 1079, that's going to be a very important level. That sits at 1 standard deviation above the point of control. And interestingly enough, the key support that we did see recently was very close to 1026.5, and that 1026.5 is where we have our point of control below the markets. As you well know, if you've been tracking us, we have been very much on the wheat bandwagon, anticipating that the wheat contract can in fact make a move to the upside. We saw the market come in and made a series of lows back in December and January, and then we saw a very nice advance followed by a pullback recently, and that pullback actually happened to sit right up against volatility-based support. Now, after the market has come in, it has now since blown through volatility-based resistance overhead, and we now have the potential for the market to actually eclipse the previous highs that we had recently seen. This one big move today, and if you include a little bit of yesterday, has covered the losses that we've seen over the last 6 to 7 trading days. That is actually a bullish indicator. Now, obviously, we've been pretty bullish, believing that it has the potential to move to the upside. It has disappointed some in terms of the nature of the strength of the advance and how late it's taken to actually start moving up. But we also had believed that as long as we had held what was formerly that 411 to 412 area, that there was a very good chance that the market can make a nice advance to the upside. That same area translates to about 440 on the July contract. And that upside target then that we're looking at is somewhere in the neighborhood of 470 to 475, with the potential of even reaching close to 480. We'll continue to watch this, but upon breaking yesterday's high, that was a very nice entry point, allowing this contract to really show some great strength today on the way up, suggesting that fund managers or significant buyers are in fact coming in and buying the dips on this market. Would also like to take the opportunity to highlight a couple key degree levels. We can see here the market went up from our 0 degree mark, moved up half a cycle, and half a cycle would be 180 degrees, where a full cycle would be 360 degrees. The market made an advance half cycle and then pulled back half of that half cycle or quarter cycle at 90 degrees. These moves are very textbook to key support and resistance levels, and we will often look at 360 and 180 degree moves as very important, significant areas for the market to react to. Upon coming back down to that 90 degree mark is where we saw our recent reaction over yesterday and really today with significant energy. And as the market makes its way up, we have potential resistance here at 462. Upon closing above 462 this week, we would anticipate a minimum advance to about 473 with the potential to go up to about 483 3/4. So that's what we're looking at right now for wheat if it is able to continue with great strength to the upside. March crude continues to hold its ground. We've spoken already about key support at 51.75 and key resistance up at 56.24. The market right now has generally been trading on the bottom half of the range, and because of that, our disposition has been that the market is probably predisposed to making a move to the downside. Surprisingly enough, today the market came in, hit support once again, and did bounce. So if it's able to get above that 50% mark of that range and get to trading in the top half of this move, it could in fact finally make an advance to the top side. That remains to be seen as of yet, but for now, as we look at the moves, simply remaining inside of this trading range is what it's been doing for quite some time. We have our 5-wave cycle that we had looked at up into this top. We have a very deep consolidation with a potential ABC move down. And so if this wave C that we're looking at right here, in fact, does hold, we would then be looking at a nice move to the upside. Upon breaking 51.72, alternatively, we do believe that the market would come down and find potential support near 48.50. And if it gets below 48.50, then in all likelihood, we're looking for it to actually break the previous lows. So our key line in the sand for this contract continues to be this 48.50. If it were to break down to that 48.5 number and turn back up, we like that as a buy. If it breaks below, we like that as a potential sell. And if the market, in fact, is able to make its way back above this 50% zone, look for continued strength with the possibility of well exceeding this 56 quarter area. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.